If you're looking for companies with a track record of success, you've come to the right place. However, I should start by saying that no company has a 100% success rate. There is always danger when engaging in an endeavor with high financial potential. The concept of weighing risks against potential rewards is common knowledge. That means that when the level of risk rises, so does the level of possible reward. This is why stock dividends typically exceed those of standard bank savings accounts over the long term. For high-yield assets like enterprises, annual returns can oftentimes be expected to be in excess of 30%. There is inherent danger in doing any of this. The Bureau of Labor Statistics reports that roughly 20% of startups fail within the first 2 years. 45% fail within the first 5 years, and 65% fail within the first 10 years of business. However, this is not an excuse to throw down the towel on your entrepreneurial dreams. In today's video, I'll be discussing the characteristics of organizations that have a low rate of failure, as opposed to those that have a high success rate. If you liked this video, please click the thumbs up button to help it rank higher in YouTube search results, and consider subscribing if you're new. So, let's not waste any more time. In this video of sage advice, I'll be discussing 6 distinct types of enterprises that are unlikely to fail. I'll provide data showing the low failure rates of these businesses, as well as some resources for getting started. As a first question, why should we care about these failure rates at all? Well, most new business owners and entrepreneurs put in a lot of time, effort, and money into getting their businesses off the ground. If you're going to start a business, you should definitely pick one with a decent shot at doing well, right? Even if you're a genius at business and can consistently beat the odds, I think it's best to have them on your side whenever possible. The vending machine industry is first on the list because its success can be predicted to some extent. The vending machine business is 90% effective. It's estimated that 85% of all firms eventually collapse. Think about how a vending machine company is unique from other small businesses. Overhead costs like advertising, rent, and salaries may quickly eat away at a company's profits. And it's not uncommon for enterprises to fail because of these issues. A vending machine, on the other hand, works for you around the clock, 7 days a week, allowing you to make money even when you're asleep. Jobs are no longer safe bets as a lot has changed in the workforce over the years. You only have to pick up a copy of your local newspaper, assuming you still read them, to know that corporate downsizing is having a major impact on the lives of many individuals today. Owning your own business is the only way to ensure your personal financial stability in a world where 90% of us are employed by someone else. To put it simply, the vending machine business is one of a kind. The business owner can set up a vending machine route from the comfort of their own home. And with minimal initial investment. You read that correctly, vending machines only accept cash. Also, unlike most businesses, vending machines can generate quick revenue. You'll start making money on day one. There are no credit concerns, bad checks, or accounts receivable. And the business operates year-round with consistent earnings and no seasonal dips. Additionally, employees have a lot of leeway in terms of scheduling and vacation time. And there are few fixed costs such as rent or utilities. Save money by not commuting to an office each day. There are no staff costs. Another great business with a low failure rate is opening a laundromat while you still work full-time elsewhere. According to Laundry Lux, a recent Gallup poll found that 66% of would-be business owners are prevented from taking the plunge due to concerns about financial failure. However, one study found that after 5 years, nearly all laundromats were still operating profitably. Nothing in business is guaranteed, but that looks tantalizingly near. Regardless of the health of the economy, this is a terrific moneymaker that will continue to thrive. In any case, people's clothing will always require laundering and drying. The laundromat business model is attractive since it requires minimal active management. In your laundromat, the machines handle all the work of washing and drying the clothes, while the clients are responsible for only loading and unloading the machines. The enjoyable part is collecting the money from the machines, so you'll still have to clean the laundromat and fix the machines when they break, but you can hire people to do the drudgery for you. Let's go on to the second company. In the realm of real estate, as the often quoted Andrew Carnegie once said, 90% of all millionaires become so through owning real estate. Did you know that more money has been made in real estate than in all industrial enterprises combined? There is little wonder, then, that the real estate investment industry boasts a fantastic success rate of 85.3%. The question is why investing in real estate may yield such high returns. Having tenants who help you pay down your mortgage while also increasing your property's worth over time is a powerful wealth generator. When you add in the fact that you can own rental property with your own money, the benefits become even more compelling. Your rental property business can also be set up to generate passive income. If you hire a property management company, however, you can avoid doing so and manage all of your properties on your own by devoting just 5 to 10 hours per month to the task. To me, that's really passive. Third, let's examine the healthcare industry, which includes not just hospitals and doctors' offices, but also pharmacies, clinics, and the dental field. Cost, complexity, and uncertainty may make this industry unpleasant, but successful enterprises rarely do. If you're an entrepreneur, inventor, or businessperson interested in the healthcare industry, now is the time to strike while the iron is hot. Policy advice studies found that in most developed countries, healthcare costs account for over 10% of GDP. You can only imagine how high it is now, given that the same study predicted that by the end of 2019, this percentage for the United States will be close to 18%. Given that the healthcare sector is the largest employer in the country, this is hardly surprising. America spends a disproportionate share of its economy on healthcare. In 2018, the healthcare market was worth a total of $8.45 trillion worldwide. It's possible that by 2022, the world will have spent more than $10 trillion on healthcare. In light of the latest statistics, it's clear that healthcare is one of the world's most lucrative industries. But this growth comes with challenges for doctors and nurses. People seeking medical care during the current COVID-19 outbreak have primarily visited smaller medical facilities, rather than community hospitals, where people go when they're scared of catching the infection. I'm going to assume you're all making notes of this. Let's take a look at the transport industry as our fourth and final business to examine. You may make a lot of money in the transportation industry if you approach it with the right business strategy. There are a number of potential customers in this sector, but you need to first assess the current need in each region. Ambulances, medical care, emergency response, relocation to remote facilities, and other similar services are also a significant part of transportation. Also, the snarl up of traffic in many large cities has made room for public and private modes of transportation to share the roads. And therefore, transportation is quite important to a great many people. As a result of these factors, demand in the transportation sector has increased dramatically. There is a growing fleet of rideshare vehicles. It's been successful, so a lot of people think it'd be a good idea for a new business. Due to developments in areas such as e-commerce, the gig economy, and online marketplaces, it is now easier than ever to launch a transportation company. You may be wondering, what is a transportation company? Basically, a transportation company is one that moves people or goods from one place to another in exchange for payment. There is a wide range of possibilities when it comes to the nature of a transportation business, from long-distance haulage to weekend Uber driving. The success percentage for businesses of this type is 76.4%. Your mileage may vary, and some sectors of the transportation industry may be riskier than others. But generally speaking, you have a good shot of succeeding. The commercial farming industry. Since agriculture is responsible for providing daily sustenance to billions of people around the world, it is our sixth recommended venture. The World Bank estimates that agriculture accounted for 4% of global GDP in 2018, though in some developing countries it may account for more than 25% of GDP. The term agribusiness is used to describe the production and distribution of agricultural goods and services, such as farm machinery and software. It's not just the farming itself that's resilient, agricultural businesses are, too. Many different types of enterprises fall under this category, from those directly related to agriculture to those that are completely unrelated. The astounding 88% percentage of success seen by agriculture-based businesses is truly remarkable. This is a great chance for anyone with a green thumb and a passion for farming or similar fields. The dump truck industry comes in at a far last on our list of possible ventures. I'll bet your expectations were thrown off by this. But hear us out. Small company trends report that the mining industry has the highest survival rate of any sector at 51.3%. It takes a lot of effort and capital to launch a mining company. There is, however, a cunning little backdoor strategy for making money off of the steady mining sector. Living in close proximity to a mine guarantees a steady demand for dump trucks, which are used to haul away coal and other materials. The best part is that you don't need $1 million to get started with your mining business idea. The going rate for a used dump truck is around $15,000. The demand for dump truck drivers has increased as the industry has expanded. Specifically, by 2025, the United States dump truck servicing market is expected to be worth $20.64 billion. And that's just for industrial scale building and mining. In all of history, today would be the best time to launch a dump truck business. When it comes to operating a dump truck business, however, things are very different. There is a huge demand for new entrants due to the fact that established enterprises often provide their own dump truck services or outsource fleet labor. The versatility of dump trucks makes them useful in many fields than mining. Whether they are used for corporate or private delivery, your services may be in demand even if you don't live near a mine, as construction companies, landscapers, real estate flippers, and even homeowners who own large properties often have to dispose of large amounts of rubbish. In closing, I'll say this. A company whose products or services help people will always have customers. If you're an entrepreneur or hoping to launch a company soon, you should aim to solve a problem that other people are having. Establish trust with your customers and employees by being open and honest, while also actively seeking out and hiring qualified new staff. And if you follow those steps, you can't help but succeed. And please share your reactions with me. Check out this video about company strategies for 2022 if you liked this one. Nothing is required monetarily to get started.